economy post 2009 great financial crisis recovered, but it was a recovery that was financed largely by credit expansion and money printing and artificially low interest rates, both in the US and in Europe, and especially, of course, in Japan. And then we came up to 2018, 2019, and the economy, the global economy at that time was already weakening. And then COVID happened, and then there was a big crash in the economy and in financial markets. And then there was another recovery and new highs in financial markets. But again, there was a lot of money printing and especially huge fiscal deficits that then led to relatively high inflation rates and eventually also to rising interest rates. But in most economies around the world, the economies have not recovered to the pre-COVID times, to 2018, 2019. I'm saying this well understanding that GDP, what people look at in general and they say the economy expanded, GDP was up and so forth, does not capture the reality of all people, and certainly not the reality that the median household, typical household in the world is facing, which is much higher costs of living and somewhat higher wages, but wages that have not gone up to the same extent as the cost of living. In other words, for most households around the world, the current conditions are not better than 4 or 5 years ago. In fact, they are worse in terms of standard of living because ordinary people don't have a lot of assets. And so when asset prices go up, they don't participate to the same extent as Mark Zuckerberg and Elon Musk and people like myself participate, that essentially have assets that then tend to appreciate. So that is the view of the economy, and I think the economies, they need to go into rehabilitation. But the governments don't want that. So they keep on printing money and providing liquidity into the system. And it helps some people. The wealthy people have advanced, have become even wealthier. But the middle class and the lower middle class and the poor worldwide are less well off than they were 5 years ago. This is my view. Now, some economists will, of course, come and say, no, that's not true. The cost of living haven't gone up much and so forth. But the evidence is very strongly supporting my view. Every government that was running out of money has essentially diminished the purchasing power of their currencies, of their money. In other words, they all created inflationary policies. They spent more than came into the treasury, and this was financed by issuing lower and lower quality coins. Say, at the beginning of the Roman Empire, a gold and silver coin had a very high gold and silver content, say 99 or 98%. At the end of the empire, it had practically no silver and gold content. You understand? And we have to understand a deficit as we have today in the US will lead, as you suggested, to some hardship in future. Now, the question is, this future, it could be far away, it could be 5-10 years away, and it could be relatively soon, because now, as you know, the rate of inflation has increased. And depending on the household and depending on your conditions in life. Do you own a house already? Is it fully paid? Or do you have a lot of debts on your house? Do you have 3 children to look after and so forth? How many subsidies do you get? Each household has a different rate of cost of living increases. But say, for most people, it's been 5 and 10%. I've seen statistics that are relatively reliable that would argue that the cost of living is going up by even more than 10% per annum at the present time. But I take now, say, a more modest figure of say 5 to 10%. At this rate, it would be a mistake to cut the Fed fund rate, because if say inflation is at 6% and the Fed fund rate is currently at 5.25% approximately, the short-term rates are still negative, and the 10 years treasuries at say 4.3% also have a negative yield, inflation adjusted. So the Fed may choose to lower interest rates this year because one of the features of monetary inflation is that the economy basically goes in real terms into recession, but in nominal terms it still expands. So a lot of people don't notice that the economy is already in recession. And if the Fed would cut rates here, I think it would be highly inflationary. And I look at markets and I always think markets are some sort of a discounting mechanism. Now, usually when a country prints money, the currency goes down. And so people look at the dollar and they compare it to the yen and they compare it to the euro. And so far, the dollar has been holding up well. But more recently, as you know, Bitcoins have gone ballistic. They may be short-term overbought, but more recently, since the beginning of March, gold and silver have gone up strongly. Now you have to ask yourself, why is gold and silver going up strongly right now? The gold and silver market may be smelling that in future there will be again money printing or more inflation, and that's why they're adjusting on the upside. And people normally don't look at gold and silver as a currency, but actually it is 99% clean currency. It is a true currency that throughout the ages have reflected fairly well the purchasing power of paper money. So let's say I take gold at $35 in the 1930s and it was fixed at $35 an ounce until 1971. So by 71, the gold should have been higher, but it was kept artificially low. But then they adjusted it on the upside and immediately gold shot up to $850 in January 1980. Now, if we take as a starting point to be fairly adjusting for the purchasing power, we should take maybe 1970-71 at about $100 an ounce. And now gold is at about $2,000 an ounce. So if I compare the cost of buying a house in 1970 and today, if I compare the price of a Campbell soup in 1970 and today, gold has maintained its purchasing power. It has been a great store of value. I do not deny that certain other assets like stocks with continuous dividend reinvestments have outperformed gold since then. That I do not deny. But in general, investors are jittery. So they buy at the wrong time and sell at the wrong time. So they underperform the indices. So as an insurance and as a store of value, I still regard gold and silver as outstanding assets. Now, more recently, when the gold and silver breakout took place, for the first time in a very long time, individual investors were selling. They were selling gold and silver and not buying additional, which tells me that this breakout on the upside is a very genuine breakout and that prices will likely move higher. Of course, there will be corrections, but in general, the uptrend in gold and silver have been confirmed. And so I want to reiterate what I said for the last 40 years. Of course, nobody ever listens. I have always maintained that you need to hold some physical gold in your house or in your safe deposit box or wherever, because you cannot trust any governments and you should never, ever trust a central banker. There are statistics that don't lie. like container traffic or the cash freight index, they're all flatlined for the last few years, and the markets go ballistic. And then, as I said, it depends who you are. I give you an example, and I don't say this because I want to brag, but the reality is this. I run a business. I manage money, and I publish my newsletter, and I'm in the financial sector, okay? So I always have a large cash reserves because of the nature of my business and because of my cautiousness. Now, in the last few years, on, say, a deposit of $10 million, maybe I got less than 0.5% interest, so say $50,000. Now, on a deposit of $10 million, I get 5% or more, so it's 500,000. I have no debts. I never had any debts in my life. I never bought anything on credit. I bought things when I had enough money to buy them and nothing else. So for me, the situation of higher interest rates is moderately favorable. Of course, I'm aware that prices also go up more than before. So let's say an airline ticket and so forth and so on, and to go out eating, the price has gone, say, over the last 4 years, for sure, the price of a restaurant is up something like 20 to 30%, depending where you are. But I don't spend the money I earn all on food and energy and insurance premiums and maintenance of the house and so forth. But a poor household, they spend, maybe if they have 2 children, they spend on the rent something like 40% of their income, and on food maybe 20-30%. At the end of the month, most people have not a penny to save. Most people. And we have statistics of the number of people who live paycheck to paycheck. The latest statistics show approximately 66%. Now the number may be 50% or the number may be 70%, but it's at the highest level ever. And that's why I'm telling you, with statistics, you can show anything you wish, depending where you start your statistics from and how you compile your statistics. I mean, recently, this is most unusual. You spoke about Honig before at the Fed. Well, Larry Summers is a well-known economist. He was, I think, Secretary of the Treasury under Obama or Clinton or whatever. Anyway, he recently published an article, and this is very unusual, that the former Treasury official would criticize the way the government compiles the rate of inflation at the present time. His rate of inflation peaked out at 18% last year. John Williams, who is he's not Democrat or Republican or anything. He's a statistician who analyzes the figures very thoroughly of the CPI, how it's compiled, because you can overweight food or you can underweight food, and you can overweight housing, and you can underweight housing. You get totally different figures. He uses the methodology before the 1980s. His inflation figures is much, much higher than what the government is publishing. And Larry Summers, in this recent article now, which appeared in March 2024, that was Henry Kaufman 2 years ago. He already said that the rate of interest is relatively low compared to the rate of inflation. Whereas in the 70s, the interest was actually higher relative to inflation than it is now. As Kaufman said, you want to fight inflation, you have to smash a fist in the face of investors and of the public, so they realize the central bank is serious about it. But we have statistics that show that recently inflation price increases have continued and are not going much lower, and yet the Fed tells the public we're going to cut rates 3 times this year, as if they knew that inflation would come off more. Well, there's one way inflation could come off more, is if the supplies of goods increases much. But the service cost inflation, that will stay relatively high. We have goods deflation in some sectors because China is producing now goods very efficiently again. But as you know, Miss Yellen is now in China. Why is she in China? She will never tell us. What the media is publishing in the US is a scam, is misleading the public from A to Z about everything. Everything is a lie. I'm not saying all the journalists are dishonest, but the people that run the papers, the editors, are all on a payroll of someone and defend the interest of some people, and they exclude the truth from being published.